Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. Hope everyone's doing well. We're taking a look at the economic calendar to kick off the morning. If you haven't already done so, 3 calendars to check out each morning. Forex Factory is an easy one. And ultimately, the reason I like this one is, I love the Forex market. I love looking at equities and futures and treasuries and currencies and metals and energies in a global way, because futures are pretty much darn near a 24-hour market. And it just reminds us that a lot of people have opinion about these symbols before the US opens, and we can inherit a certain opinion. We can see what that opinion was at 9:30 or 8:30 Eastern, whatever it is, whenever you're starting your morning. And Forex Factory is a great reminder of that. Today's calendar is pretty darn quiet in terms of US data. As you can see here, Wednesday, we do have an evening FOMC member, Williams. That's going to affect more the Asian session and obviously Thursday's open, but pretty quiet in terms of data. Crude oil inventories, we'll be taking a look at that when I see my folks in the Sector Secrets Mastery later on this morning. 5:30, FOMC member Goolsby. So most of the stuff that we're going to get in terms of FOMC chucklehead talk is going to be after the close. All right, second calendar that I usually recommend is going to be trading economics. The main reason for this, even though we've got to just sort of clean it up a bit so we can focus on the US releases, is because there are FOMC events that sometimes won't be listed at trading, that won't be listed at Forex Factory, that will be listed over at Trading Economics. And some people just like the layout of this particular, as you can see here, calendar better. Up to you. But the third most important calendar right now is Estimize. Right. So I use my old StockTwits login to get into Estimize. Once I log in, I've got access to the free version, which I'm a big fan of. If you are an earnings trading type of person, I would not consider myself a trader of earnings. To be quite frank, and this is probably an unpopular hot take, I hate earnings season. It's a lot of noise. And for those of you that have been trading, say 2-3 decades or more like myself, you remember when earnings season was not a thing. Earnings has created a lot of volatility, not necessarily clarity of trend. That is what we want. Once upon a time, you got mailed the darn earnings update. It wasn't this whole, drama unfolding, the earnings gala. It's just crazy. I'm not a fan. However, with high concentration weighting and the way in which most indices and sectors are weighted, individual stocks, especially making outsized moves during earnings, can affect the sector, can affect the index. So I can't be stubborn, can't be double mule, twice as stubborn, half as smart. I've just got to accept that this is the reality of modern markets. And I track those heavily weighted stocks here at Estimize. Big fan of the site. And again, you can access this for free. And if it's something you think is going to help move the needle, it is a cool service. I don't even know these folks. This is the free version, by the way. So that's the third calendar, because I want to track not what's coming up today or tomorrow or even next week. I'm going to scroll way the heck down and find things coming out in 2 weeks, 3 weeks, 4 weeks, 5 weeks, because oftentimes the best clarity going into earnings is a month and a half out before we actually get the volatility, before we actually get, as I like to call them, that hot zone. All right, gang. So that is just a quick run through what we're dealing with right now. What about what's going on in the broader averages? We'll take a look at the big three, take a look at the Euro, the S&P, and the ZB, the long bond. We're heading lower today. We're inheriting a little bit of weakness, as you can see. We're below the previous session close and low. So this would be quote unquote a true gap open. I'm not simply going to blindly automatically fade buy a down open, a true gap, but I will keep an eye for in the first 5 minutes whether or not that fading opportunity does arise. S&P is in an uptrend. NASDAQ is in an uptrend. XLV, XLF have definitely been getting the love here in Q2. So I'm not bearish the S&P, gang. In fact, I'm not bearish the equity markets at all. However, here's the asterisk. Here's the contingency. We have to start getting by July, not if not in the actual cut, which I'm not expecting, but the verbiage of the pivot. Powell's got to start sounding like he's preempting a cut for September or definitely November. If that does not happen, if Fed Fund futures say, wait a minute, Powell, we're telling you what you want and you're ignoring us, heads up, we'll probably see a pullback in equities and a move lower in bonds and a move lower in the euro. All right, so moving on then to the euro. Love this as a buy. Euro continues to move higher. The ECB is still in the hawkish part of their cycle still. They're really looking at continuing rate hikes. So are we in the US. I mean, there's no question about that. However, we're down to the last one, maybe 2 quarter-point hikes. I don't believe the Euro ECB is anywhere near that. Well, according to most of what they've been saying, we'll see what happens. But dollar weakness in accordance with euro strength is still something that we want to take advantage of. And then finally, we have the ZB. Poor ZB. We're at support from a price basis. You can see the Darvis area here around 129.17. Okay, so we've got support there by way of Darvis. However, is this a buyable contract yet? For me, this would be an aggressive level buy at best. I would say go in with small size, maybe even TLT calls to minimize that leverage, to minimize the possibility that we continue to head lower from this area. We are below the point of control for 2023 on the long bond. Now, the other thing we could think about here is the fact that the bonds are stuck between one, if not 2 more quarter-point hikes between now and July, and then come November, a more accommodative monetary policy. We start shifting into a dovish cycle. Bonds are stuck in the middle of that. I do not expect bonds to go much lower than the daily price movement range, but quite frankly, we've got some pretty good support based on the lows we see on March 22, the low we saw on March 29. We're right there with the lows here today and on April 19. So between those lows and the Darvis again sitting at about 129.17, nice layer of near-term support. How would we confirm this? I would confirm this with very likely a slow stochastic, okay? An oversold slow stochastic. All right, let's get to the questions, gang. As always, best part of our show. And first up, Jay asked, last night's video showed the daily price movement range low. Yes, so last night's video, for those of you that may have not caught it, you can head on over to the Simpler Trading YouTube channel. Some of you are probably on that right now, although we are broadcasting on Twitter, Facebook, YouTube, and who knows where else. But if you want to check out the video, head on over to Simpler Trading's YouTube channel and you will see me there. And you can check out the setup zones and focus, which, Jay, I imagine that's what you're alluding to. Yeah, I really highlighted a lot of those daily price movement range volatility zones. Absolutely. So you're talking about the gold commentary. All right, let's jump on over there. So by the way, gang, I'm on TradingView charts right now. Love these charts. Very cool charts that I have all my indicators running on, as well as Thinkorswim. So we hit 1881. Brilliantly touched that about an hour ago. I mentioned around 2000, but I'm wondering if this is too low or just right for a buy. Oh, you're talking about this wick here. Yeah, we definitely traversed the zone of the daily price movement range, probably even arguably just got below it. You can see right there. I mean, the accuracy of these things is pretty spooky. You look at the degree to which we sold off, 44 points, and we were within, what, 85? We were within about 5 points of the low with the daily price movement range. So is this a buy? On the 1 hour, no. On the daily time frame, a yes. And why would I be that specific? The daily time frame's in an uptrend. The 1 hour is in a downtrend. So this would be basically a buy the dip. Yeah. And remember, the zone gives us then an agro, moderate, conservative zone to scale into, all right, to scale into. All right. So then let's see. So yeah, I would say that zone it's a little wider, right, than just 2000. It's about a 20-point zone, which is well within typical volatility of gold. But yeah, I believe that's a viable move. Yes. All right. ES. Hey there, Avi. ES have Darvis sell signals, slow stow overbought, but the daily. Okay. So yeah, Avi, let me know what time frame you're looking at. That's always the best place to start. Oftentimes, just as important as the symbol is the time frame. So we take a look at ES. ES daily time frame is trying to turn into a trend. I would be looking at a buy for the most part here. And let me do something real quick. Make sure. I would look for, we got the second day of the green, so it's now officially sort of a buy the dip environment. So you're talking about the daily. Thank you. Thank you. I did not read the whole question. My bad. So daily, we are still not allowed to go short. Nope, not on the daily, Avi. So great point. If we've gone double green, I'm not allowed to go short on the daily. Now, when we start day trading in about 20 minutes, 5 minute might give us a short, 1 hour might give us a short, but you're absolutely correct on your assessment of the daily, Avi. Not allowed to go short. Once that structure, market trend, market phase, market mood, whatever you want to call it, once it goes green, no longer can I short on that time frame. Okay. All right. Next up is PJ's asking, is this the same as John Carter's Simpler Trading? PJ, this is Simpler Trading. Yes. All right. Next up, my DPMRs are amazing. They are pretty darn great, aren't they? But it's just a function of there being a historical pattern for volatility, right? It's just a function of there being, if you look back over 6 months, there is a rhythm, right? And we can dance to it. So now we've put the zones on the chart, makes it a whole lot easier to see as opposed to the number crunching, just crunching the volatility numbers hour by hour or day by day, which was a whole lot more work. Something that I did fairly contently for about a decade, but the automation makes it a whole lot easier. I agree. Thanks, Jay. I appreciate it. All right. How do I expect the planned rollout of the Fed now or CBDC in July will affect the stock market? I haven't really even given any thought, to be quite frank. Shiny? I haven't. I'll probably take a look at it at some point. I don't hear a lot of chatter about it, quite frankly. I might have heard a little bit on the periphery. For now, my opinion of where the stock market is heading is firmly in what is being played out on the Fed fund futures and then reflected in the target rate probability and where is that terminal rate going to be, and ultimately where do we get that Fed pivot. Anything else to me, quite frankly, including earnings, to me are just not where the shift in sentiment and trend can and will come from. The biggest threat to the bulls right now is that Jerome doesn't cave and give the Fed fund futures and the target rate probability expectations the pivot that they're looking for July, September into possibly a November cut. If we don't get that sort of expectation confirmed in May's meeting, June's meeting, that's going to be pretty bearish. So I'm looking purely at that measuring stick, if you will. All right, and I think I'm paraphrasing, of course, but the great Stan Druckenmiller has it right. The only macro that matters is the Federal Reserve and what they say, right? What is their opinion? Because their opinion maps to their messaging, and their messaging maps to ultimately their action. So that is the macro, right? But the reason we look at jobs, inflation, growth, etc., is because they're making their decisions presumably based on that data, right? So thanks for the question. All right, next up, Robert asks, is there a trial for my room? For the Sector Secrets Mastery Room? No. We do have from time to time classes where once you've learned and got the indicators in the class, you have anywhere from, like our last class, 1 to 3 months with me included in the room with the class. We have, I'm trying to think what we've done in the past, but no, there is no trial for the room. And I'm going to be quite frank as to why. Number one, we do a lot of charts and coffee. And I mean, and thank you for asking, Robert. And gang, I mean this sincerely. We do a lot of charts and coffee. I do the Sunday show. We have roughly, let's see, 2 hours of free content every week, right? And my hope is when people log in and check out Charts and Coffee or Sundays this week in the market report, you've got a really good idea of the tools that I'm using and the analysis that I'm doing. In fact, we do analysis every single show. So my hope is at that point, you get a good feel for, okay, Raghee's my kind of trader, or even more so importantly, Raghee's not my kind of trader. Those aren't the principles that resonate with me. I really want everyone to get a really good idea of that. Hence, I spend 20 minutes every morning, kind of it's my favorite cup of coffee, right? Every morning with you all. And then my hope is that at that point you think, okay, I'll check out what she's doing. The other reason I don't like trials is because there's usually not a commitment. Most people are, and I'm going to say this very frankly, most people are simply not going to be committed to a trial. They'll kind of tune in, they'll tune out, and they won't get the best of it. I know when I've got free access to things in the past, I don't use it. When I commit my time and money, all of a sudden I'm taking it pretty darn seriously. And the last reason is a little self-serving. I give away a lot of free tools in my mastery, whether that be my custom slow stow, a certain limited pack of hourly price movement ranges, the multi-trend. I give those things to members. And so I do feel there's a lot of value to those tools. And frankly, I'm not going to give those things away to people who are just kind of on the fence. I'm being very frank. I don't want anyone to waste their time or money. And that's why the shows are so important to me, to be able to share with you all as best I can what it is you can expect a lot more of when you join me in the room. All right, next up, what are my thoughts on PayPal? All right, let's go take a look. So we always want to build our charts up from the bottom, meaning I want to look at always what is the mood, the trend, the phase, the structure, fill in the blank, whatever word that resonates. What's the mood of the market? PayPal continues to be two things, Pierre. It's below the 200 propulsion. And if you're not looking at the 200 propulsion, which I make available for free on TradingView, or if you're not, just throw the 200 exponential moving average on the close on your chart, that's the equator. And if we're trading below that, there's a lot of bearish sentiment, mostly dominating that symbol versus bullish sentiment. Getting above the 200, a big deal. Take a look at the struggle, say crude oil futures are having right now at that 200. Any chart above the 200 has a little bit more inherently a bullish type opinion that's going to accompany it. Below a little bit more bearish. Okay, after that, we are neutral. So if you're looking to build a long position in PayPal, find those oversold support levels to buy. You're probably looking at an area between 73.5 and 71, right? But the really important level to break is 80 and then 87. 80 is going to be a major psychological level. There's a Darvas 2.0 sitting there. My daily price movement ranges have been in that area around 80. It's going to be very important to break that level for further upside. So I guess the first thing to think about, Pierre, is which direction are you thinking about trading it in? To the short side or to the long side? I think at this point, you could probably be either. It just depends on whether you're near support, that's oversold, that's our buy, or if we're at 80 or 87, which could be a challenge for further upside. All right, next up is, thank you for all the questions, gang. Good stuff, good stuff. All right, bear with me. Hello from Texas. Hey there. Hello. Good morning. Good morning. Good morning. Hang on, I'm trying to find the next question here. Trader Momo asks, when the Forex Factory has an event and it's based on euro or pound and the notes say actual greater than forecast, is this good for the currency? It depends on the data, my friend. We can't just say a beat is always positive, right? So it depends on the currency. It depends on the monetary policy. But for the most part, if it's jobs, if it's growth, right? If it's the health of the consumer or some sort of retail metric, yeah, for the most part, it would be considered bullish for the currency, bullish for the economy. right? Okay, gang. And just like that, our show is winding down. Thank you, as always, gang, for your time. Thank you, as always, for showing up for Charts and Coffee. We're here Monday through Friday, 9 to 9:20, answering your questions, taking a look at the market together. And then on Sundays, we do a This Week in the Market special to kick off the week, Sundays at 6 p.m. Eastern. All right, gang, be good to each other. I'll talk with you soon.